Prince Harry just filed for bankruptcy. Federal court documents show $47 million in total debt against $8 million in assets. The Montecito mansion is being liquidated. Emergency proceedings are underway, and the sworn financial disclosures he submitted under penalty of perjury reveal a level of financial collapse that nobody anticipated. This isn't about financial difficulties anymore. This is about mathematical impossibility. This is about a lifestyle that was being funded through mechanisms that have now completely failed. And the court documents that just became public tell a story that goes far beyond one family's money problems. Let's start with what the bankruptcy filing actually says, because the numbers themselves are only part of what matters here. According to the Chapter 7 petition filed in the Central District of California, Harry's total liabilities are documented at $47.3 million. His total assets are valued at $8.2 million. That creates a negative net worth of $39.1 million. In bankruptcy terms, that's not a difficult situation requiring restructuring, that's insolvency requiring complete liquidation. The creditor list includes 23 separate entities. Some of the amounts are staggering. Tyler Perry is listed for $16.2 million secured against the Montecito property. Netflix appears for $12.7 million related to a breach of contract judgment. American Express shows $2.3 million. The IRS is listed for $8.9 million in back taxes and penalties that the filing characterizes as non-dischargeable, meaning they survive the bankruptcy and will follow Harry permanently. The legal team handling the filing is Skadden Arps, one of the most prestigious bankruptcy firms in the country. That choice tells you something. You don't retain that caliber of representation for a routine financial restructuring. You retain them when the situation is legally complex and the stakes are severe. The financial schedules attached to the petition show monthly income of $73,000 against monthly expenses of $387,000. That's a deficit of over $300,000 per month. That deficit isn't sustainable for a month. It's certainly not sustainable for the years it would take to restructure debt of this magnitude. Now, here's what makes this different from standard celebrity financial trouble. The filing wasn't voluntary in the sense of being a strategic decision made at a moment of Harry's choosing. According to sources familiar with the timeline, this was an emergency filing triggered by simultaneous creditor actions that were about to result in coordinated asset seizures. Tyler Perry had initiated foreclosure proceedings on the Montecito mansion. American Express had won a fraud judgment and was moving to collect. Netflix's breach of contract case had been decided in their favor and they were pursuing enforcement. And the IRS had issued notices of intent to seize assets for the outstanding tax obligations. When multiple creditors are simultaneously moving to seize the same limited pool of assets, bankruptcy law calls it a race to the courthouse. The filing creates an automatic stay that freezes all collection activity and gives the court authority to manage the liquidation process in an orderly way that treats creditors equitably, rather than allowing whoever gets there first take everything. That's not a description of someone making a strategic choice. That's a description of someone whose options have been eliminated by circumstances they can no longer control. Before we go deeper into what the financial schedules reveal, if you're finding this analysis valuable, subscribe right now and turn on notifications. This story involves federal court proceedings that are going to generate developments over weeks and months, and the legal and financial implications extend far beyond the immediate headlines. Hit the like button if this kind of detailed breakdown is what you're looking for. And drop a comment with your genuine reaction to these numbers, because I want to know whether this matches what you expected or whether the scale of it is surprising. The asset schedule tells its own story. The Montecito mansion is listed at $6.8 million after accounting for the Tyler Perry lien. But real estate doesn't liquidate at appraisal value in emergency bankruptcy sales. The trustee's estimate for actual recovery is $5.8 million after fees and commissions. That's the single largest asset. Everything else combined totals $1.4 million. The vehicle schedule shows $340,000 in luxury cars against loan balances that exceed the vehicle's values. The jewelry schedule includes Meghan's engagement ring, valued at $180,000. Personal property, furniture, household items, the things that filled a mansion, are collectively valued at $67,000. What's notably absent from the asset schedules is more significant than what's present. No substantial investment portfolios, no business interests with ongoing value, no intellectual property rights generating meaningful residual income. The asset base is almost entirely the house and the things in it. Once those are liquidated, there's nothing left that generates value. The income documentation shows where the $73,000 monthly figure comes from. Book royalties account for $31,000. Speaking engagement fees bring $28,000. Investment returns $14,000. These are residual income streams from past activities, not earnings from current productive work. And they represent a dramatic decline from the peak earning period of 2021 through 2023, when Netflix and Spotify advances were creating the impression of sustainable income. Those advances are gone. What remains are the obligations those advances were meant to fund the creation of content that mostly didn't get produced. The expense schedule is where the mathematical impossibility becomes starkest. Mortgage and property tax payments, $89,000 monthly. Household staff and security, $127,000. Luxury vehicle payments and maintenance, $34,000. Private school and childcare, $43,000. Personal living expenses including clothing, entertainment and travel, $94,000. These aren't expenses that can be trimmed at the margins. These are structural costs of a lifestyle that was built around assumptions about income that turned out to be wrong. And the gap between what's coming in and what's going out has been filled by borrowing that has now reached its absolute limit. The Statement of Financial Affairs, which is required in all bankruptcy filings, documents the 2 years preceding the petition. It shows asset sales totaling $2.7 million during 2023 and 2024. Those sales weren't used to pay down debt. They were used to cover immediate expenses while the underlying financial deterioration continued. It shows preferential payments to certain creditors, totaling $890,000, that the bankruptcy trustee will likely seek to recover and redistribute to all creditors equitably. And it shows asset transfers to offshore accounts and third-party entities that are characterized in the filing as potentially fraudulent conveyances subject to recovery. That language, fraudulent conveyances, is legally significant. It means the trustee believes assets were moved out of Harry's control for the purpose of making them unavailable to creditors. Those transfers can be reversed, and if they were done with the intent to defraud creditors, they can trigger criminal referrals to federal prosecutors. Now let's talk about what happens next procedurally. Because Chapter 7 bankruptcy isn't a negotiation, it's a liquidation. A court-appointed trustee takes control of all non-exempt assets. In California, bankruptcy exemptions protect a limited amount of equity in a primary residence, a vehicle, personal property, and tools of trade. Everything above those exemption levels belongs to the bankruptcy estate and gets sold. The trustee's job is to maximize the recovery for creditors. That means orderly sales at the best prices achievable under the circumstances. For the Montecito mansion, that means listing it with a broker and conducting a marketed sale. For vehicles and personal property, that often means auction processes that rarely achieve retail values. The proceeds from those sales get distributed according to the priority rules in the bankruptcy code. Secured creditors like Tyler Perry get paid first from the collateral securing their debt. Priority claims like the IRS obligations get paid next. Unsecured creditors like Netflix and American Express get whatever remains after higher priority claims are satisfied. In a situation where debt exceeds assets by this margin, unsecured creditors will receive cents on the dollar if they receive anything at all. That's the mathematical reality of insolvency at this scale. And here's something the court documents make clear that often gets lost in bankruptcy coverage. The trustee doesn't work for the debtor, the trustee works for the creditors. Harry doesn't control this process anymore. He's a witness to it. The trustee will make decisions about asset sales, timing, pricing, all of it, based on what maximizes creditor recovery, not what minimizes disruption to Harry's life or preserves any element of the previous lifestyle. That shift from being in control of your financial decisions to being subject to someone else's authority over your assets is one of the most psychologically difficult aspects of bankruptcy for people accustomed to wealth, autonomy. And is permanent until the liquidation concludes and the discharge is entered, which typically takes months and sometimes years in complex cases. If you're still watching, you're clearly interested in understanding not just what happened, but why it matters beyond the immediate Sussex situation. Subscribe if you haven't already, because the broader implications of this bankruptcy extend into questions about how celebrity finances actually work and what happens when the gap between public image and private reality becomes this extreme. Like this video if analysis grounded in actual court documents rather than speculation is what you value. And tell me in the comments whether you think this outcome was inevitable given the trajectory since 2020, or whether there were decision points where different choices would have produced different results. The timeline that emerges from the court documents shows how quickly unsustainable spending can destroy what initially looked like a solid financial position. March 2020 through December 2021 was the period of massive advance payments. Netflix, 40 million, Spotify, 25 million. Those numbers generated headlines and created the impression of successful post-royal monetization. But advances aren't income in the sustainable sense. They're payments against future deliverables. And the deliverables largely didn't materialize. During that same period, the monthly expense burn rate established itself at around 400,000. The Montecito purchase, the staff, the security, the lifestyle infrastructure required to maintain the public image. All of that got built and normalized during a period when the bank account had large numbers in it. January 2022 through December 2023 was when the math started breaking. The advance money was being depleted by the established expense rate. But the content production that was supposed to justify those advances and generate ongoing income wasn't happening at the pace or quality required. That gap got filled by credit cards, personal loans, asset-backed borrowing against the house. Each borrowing decision made sense in isolation. The assumption was always that the next deal, the next project, the next revenue stream would materialize and make the interim borrowing irrelevant. But the deals didn't materialize at the scale required, and compound interest on growing debt loads started exceeding the capacity of new borrowing to cover it. January 2024 through December 2024 was the crisis acceleration phase. Creditors who had been patient started pursuing judgments. Netflix won their breach case. American Express won their fraud case. The IRS completed their audit and issued assessments. Asset sales during this period, the art collection, the watches, the investment holdings, these were emergency measures that provided temporary cash while eliminating future income-generating capacity. And then January 2025 brought the simultaneous enforcement actions that made bankruptcy unavoidable. Once multiple creditors are moving to seize assets at the same time, there's no way to manage the situation outside of federal court supervision. The bankruptcy filing itself was dated February 3, 2025, less than 5 years from the departure from royal duties to complete financial insolvency. That timeline is remarkable not because it's unusual for celebrities to have financial problems. It's remarkable because of the scale of the resources that were available at the beginning and the completeness of their depletion by the end. Now here's the dimension that makes this story extend beyond personal financial failure into something with broader implications: the non-dischargeable debt. Chapter 7, bankruptcy eliminates most unsecured debt. Credit cards, personal loans, breach of contract judgments, these can all be discharged, meaning the legal obligation to pay them disappears. The debtor gets what bankruptcy law calls a fresh start. But certain categories of debt survive bankruptcy. Fraud judgments survive if the fraud was committed with actual intent to deceive. And federal tax obligations survive with very limited exceptions. Harry's filing shows $8.9 million in IRS obligations characterized as arising from fraud penalties. That debt doesn't disappear in bankruptcy, it follows him permanently. The IRS has unlimited collection authority. They can garnish future wages. They can seize future assets. They can file liens that attach to anything he acquires going forward. That means even after the bankruptcy concludes and the dischargeable debt is eliminated, Harry will be operating under permanent federal tax collection monitoring. Any significant future income will be subject to garnishment until those obligations are satisfied. Any substantial assets acquired will be subject to seizure. That's not a temporary setback. That's a permanent financial constraint that changes the entire trajectory of what's possible going forward. And then there's the reputational dimension. Federal bankruptcy filings are public records. Every schedule, every disclosure, every transaction documented in the Statement of Financial Affairs. All of it becomes permanently available for review by anyone who wants to examine it. Future business partners conducting due diligence will review these documents. Lenders evaluating creditworthiness will review these documents. Media organizations fact-checking claims about financial success will review these documents. The privacy that wealth usually purchases is gone. The financial reality is now permanently part of the public record. For someone whose post-royal income has been built primarily on media projects and public appearances, that reputational cost is not trivial. It's difficult to monetize a personal brand built on aspiration and success when the public record documents insolvency and financial mismanagement at this scale. We're approaching the end of what these documents reveal, but before we finish, if you found this breakdown valuable, do 3 things. Subscribe so you catch the follow-up coverage as this bankruptcy proceeds through the court system and as the asset liquidation process produces new information. Like this video if detailed analysis of court documents is the kind of content you want to see more of. And share your perspective in the comments on whether you think there's a path back from this level of financial collapse, or whether this represents a permanent change in circumstances that no future earning or lifestyle adjustment can really reverse. 3 scenarios exist for how this proceeds from here, and each has different implications. The first is straightforward liquidation and compliance. The trustee sells the assets. The proceeds get distributed to creditors. Harry and Meghan cooperate fully with the process. They relocate to housing they can actually afford on $73,000 monthly income, which is not Montecito. They adjust their lifestyle to match their actual earning capacity rather than their previous expectations. The dischargeable debt gets eliminated, the IRS obligations get put on a long-term payment plan, and they rebuild from a position of radical simplification. This scenario requires accepting a level of lifestyle reduction that people accustomed to wealth often find psychologically impossible. But it's the scenario that leads to the cleanest resolution and the fastest possible path to some version of stability. The second scenario involves legal complications. The trustee's investigation into the asset transfers and preferential payments produces evidence of intentional fraud. Criminal referrals get made to federal prosecutors. The bankruptcy proceeding becomes entangled with criminal exposure. Instead of being a financial reset, it becomes the beginning of a more serious legal crisis, with implications that extend beyond money into potential incarceration. This scenario is not certain, but the language in the filing about fraudulent conveyances and the documented offshore transfers create genuine exposure. And federal bankruptcy fraud is prosecuted seriously when the amounts are this large and the evidence of intent is clear. The third scenario is attempted evasion. Harry and Meghan relocate internationally to a jurisdiction where US bankruptcy, court orders, and IRS collection authority are difficult to enforce. They attempt to maintain some version of their previous lifestyle outside of US jurisdiction while providing minimal cooperation with the liquidation process. This generates ongoing legal conflict, eliminates any possibility of legitimate US-based income, and creates a permanent fugitive status that makes stable living anywhere difficult. This is the scenario that produces the worst long-term outcomes, but the people facing the psychological difficulty of radical lifestyle reduction sometimes choose despite its obvious costs. Which scenario actually unfolds will become clear over the coming months, as the trustees' work proceeds and as Harry and Meghan's level of cooperation or resistance becomes visible through court filings and compliance with liquidation requirements. What's certain is that the filing that became public this week represents a complete break from the trajectory that began in 2020. The post-royal financial model has failed, not struggled, not required adjustment, failed completely in a way that federal court supervision has now made permanent public record. The mansion will be sold, the possessions will be liquidated, the lifestyle will end. And the permanent federal monitoring of future income and assets will continue until obligations that total in the millions are satisfied through whatever earning capacity exists going forward. That's not speculation. That's what Chapter 7, bankruptcy with non-dischargeable tax debt, means in practice. And there's one final dimension worth acknowledging, because it speaks to the human element beneath the legal and financial mechanics. Bankruptcy at this scale, particularly when it's involuntary and triggered by creditor enforcement rather than strategic planning, represents a form of public failure that is extraordinarily difficult to process psychologically. The court proceedings require sworn testimony about financial decisions. The asset schedules require itemizing every possession of value. The statement of financial affairs requires disclosing every transaction, every transfer, every financial choice made during the years leading to insolvency. That level of enforced transparency about failure is something most people never experience, and that people accustomed to controlling their public image find especially devastating. Whatever the choices that led to this moment, the human cost of navigating it is real and shouldn't be dismissed even when the financial decisions that created it warrant serious scrutiny. Subscribe for continued coverage. Like, if this analysis delivered value, comment with your genuine take on where this goes from here. Because the bankruptcy filing is public, the consequences are permanent, and the story is far from over. Stay informed. This matters beyond one family's finances.